Bitcoin is an intentional escape valve for the wealthy. I think it's been interesting to look at how Bitcoin has been treated relative to other assets by the current administration in the US, by financial elites, maybe like Larry Fink and so on, who talk really highly about Bitcoin as this fear trade, as something sovereign, as something useful in some way. And I think it's all intentional to give a certain image towards Bitcoin. And of course, Larry Fink has the incentive of fees and capitalization on the centralization of Bitcoin through BlackRock's ETF, the best performing ETF fund of their lifetime, of their creation. So I think that, Bitcoin in self custody is incredibly useful for the financial elite, just as many other financial escapes have been as well. I'm going to get further into this after I introduce myself. My name is Forrest Hodel. I'm a Bitcoin educator, and I'm the head instructor and community leader at the Bitcoin Masters, which is an online learning community, which you can join through the link in the description. And I also do one-on-one coaching sessions for anybody needing a little extra helping hand so that they can get the best practices and they can take self-custody of their Bitcoin, run a node, plan for inheritance and whatnot. And I'm currently running a deal. Maybe you're watching this way in the future, it no longer exists, but I'm currently running a deal where if you book an hour with me, you'll get free lifetime access to my school community. And that's up to 100 people within that community. And then that deal no longer exists. And will be no other way to get lifetime membership. So check that out, links in the description. So if we take a look at some of the other things that the financial elite or the financial heavyweights, very, very wealthy people have access to compared to other people, you might think, well, why hasn't the authorities clamped down on things like tax havens? Why is there a tax haven in Ireland for companies, even though they might be basically American companies? They have a large portion of their entity set up in Ireland, or hedge funds are set up in the Cayman Islands. There's all these little loopholes to basically have wealth be able to exist without being burdened by the tax of the jurisdiction that we all live in. All of those things exist. All of those things could be shut down, but there's an incentive by the ultra wealthy to keep these things existing. And they lobby to do so. They actively move in a way to make those things exist. There's the incentives that naturally create them, and then there's the protection that they provide to keep them existing because they all benefit from it. And you have to think that the regulators, the ones that are really pulling the strings in regulation, might have not only just the incentives of their constituents or people that they're funded by that want them, but they themselves might be able to access these escape valves for jurisdictional arbitrage as well. So I believe that Bitcoin is very similar to this in some ways. Bitcoin, if you look at the I think it's the Clarity Act, they talk about the rights of self-custody and how it's important to be able to have self-custody. These rights have been enforced statewide as well in some Bitcoin laws, right? There was this big push for Bitcoin laws to, for states to be able to buy Bitcoin and put it in their rainy day fund or on their balance sheet or whatever. And by the end of the position of that bill, when it got written into law, all of that was taken out. And really the only thing that people were able to get into law is the right to self-custody these assets. And this is an escape valve from the current monetary system. Everybody still thinks about Bitcoin in its exchange rate price. And as I record this, Bitcoin's plummeting, right? So Bitcoin is, everybody's thinking it's going into a bear market, all this kind of stuff. Maybe so, maybe not. I don't know. I don't have a crystal ball. But what I do know is that it's important for Bitcoin to be separate, be an alternate monetary network for anybody, a neutral monetary network. And it's a finite, valuable network to be a part of. If you just understand the simple supply dynamics of an asset with diminishing supply issuance and a fixed supply versus any other asset that doesn't have those aspects to them, and both of those are equally demanded, then one will appreciate in price, because the only other variable in the supply demand dynamics is price. Price has to move up to create more supply. So that's all inevitable, right? That's the number go up technology in Bitcoin. But the right for self-custody, right? It's this idea of, again, you can look at Larry Fink as a great example. He is not giving out information, providing education on self-custody or promoting self-custody even. He is saying that if you're in fear of your currency, you want to have Bitcoin as a hedge against that because it is this other monetary network. But if you're buying it through BlackRock, you're just buying an ETF. You're buying a layer 2, a wrapped Bitcoin product, essentially. It could be described as a type of layer, or it's probably better suited to describe it as a wrapped Bitcoin product. It's a financial asset that trades on financial rails that gives you exposure to Bitcoin's fiat price denomination. And it's supposed to buy spot Bitcoin behind it. And it's, all the regulation enforces that or whatever. But it is not Bitcoin, right? If you own IBIT, you do not own Bitcoin. You don't even own a claim to Bitcoin. You can't redeem that for Bitcoin. If you own Bitcoin on an exchange, you at least own a claim to that Bitcoin. If you own IBIT, you own a financially wrapped Bitcoin exposure product. That's pretty damn far away from a self-custody, sovereign escape valve type asset that is not within the realm of the fiat world. So the fact that these laws exist right now for individuals to have self-custody and not be punished from trying to do so, not have exchanges try to force them to keep the Bitcoin on the exchange. You're allowed to take it off the exchange really easily, and through OTC or whatever, you're able to take self-custody as an individual and as maybe the financial elite. I hate that term, but I have no better way of describing them in a simplistic term. The financially, heavyweights, very, very wealthy, they can take self-custody legally, and they can begin moving their wealth out of the system and be able to participate in the alternate neutral monetary network. This is an incredibly valuable thing. They can take their wealth with them, right? It's incredibly powerful as an individual, and it's just as powerful, except with more purchasing power for the financially very wealthy. So it's very powerful, the idea of having your money completely outside of a controlled financial system that allows or doesn't allow transactions to happen, that restricts and has fees associated every single part along the way, and can be frozen at any moment, right? The financially wealthy, they are at a very big risk. This is what's very interesting. People think, oh, well, they have financial freedom and all of this. They are tied up oftentimes so much in the financial industry that exists that they are really highly at risk of making the wrong person upset and therefore basically having their assets seized because they have a serious honeypot, right? If you think about somebody that's middle class, or the less you have, it's sort of that saying where the nail that stands out, right? The nail that's the highest gets hammered first. So they're sort of up higher. Hopefully they're greasing the right palms, making the right connections, and they're safe, but they have the most to lose. So they have to protect themselves the most. So if you think they're not protecting themselves by taking Bitcoin in self-custody, I think you're probably very wrong. It just makes sense to have this asset that's completely separate from the current monetary network that is controlled by people they're probably friends with. And if they're still, in good standing, they are. But it's very likely that they could be out of standing and in trouble. So they would want to have sort of an insurance policy, which would be Bitcoin for them in self-custody in some way. And essentially, a lot of them are really just selling you the exact opposite of that. Fink is selling you the exact opposite of Bitcoin and self-custody, or maybe not the exact opposite. You still get price exposure, but it's completely within this contained fiat system that is still benefits the fiat system by existing. So as much as it provides a market for Bitcoin or spot buying, it still just is more fiat games. It's if you're participating in the fiat network, you're supporting the fiat system, and the Bitcoin ETF is definitely a part of the fiat system. So my theory here is that just as much as the offshore Cayman Islands is a benefit and is intentionally existing for wealth to have a safe haven, so is the right to self-custody. I think if it was only the individuals out there, the holders like you and I think the rights of self-custody would be far more in jeopardy. That doesn't mean that you wouldn't be able to take self-custody, but it would mean that you would be potentially trying to break the law by doing so, which is a ridiculous idea, but there's all sorts of ridiculous laws out there. So I would just suggest that in some ways, the Bitcoiner wanting to take self-custody, we are all on the same team because we all want control over our money when we are doing that, if that is our main purpose or part of our purpose. But there are people that are using it as a hedge, and there's individuals doing that. There's corporations, there's large financial elite people doing that as well. But that is one use case of Bitcoin, is having this small hedge outside of the current monetary system. And I think that is an incredible use case for people that understand that that's what it is or what it can be used for. I think there's also this risk that we all know as Bitcoiners where your fiat funds are not seized or frozen. They are simply just eroded away in purchasing power. And you completely escape that by self-custody as well. These people have assets that inflate relative to the debasement of currency, or maybe even more so benefit from it. So, there's other ways to protect yourself from fiat debasement, even within the fiat system. Bitcoin is not exclusive to that. Gold, silver, other, relatively scarce assets like waterfront property, real estate, desirable real estate, these kind of things, investment in companies that, have profits over time and are increasing in profits relative to debasement. All of these ways are protect against that. But Bitcoin does that as well by not having to be a gamble on a company with earnings, by just being a monetary asset that is 100% monetary premium, has no other use case besides money, which gives it its pure goal and its pure motive of being money. And the purity of that is actually what makes it more valuable and more useful and more able to be the neutral monetary network of the future. So that's just a kind of a random thought I had today. Wanted to explore it a little bit more on video, explain that I think that Bitcoin serves a similar role for the financial elite as it does the Cayman Island offshore accounts do, but it is completely separate than the fiat system. And there's a reason why self-custody and sovereignty is not under threat in North America as it is in some places around the world. I had a client one time who lived in India, and he said, you can buy Bitcoin, you can get price exposure to Bitcoin, but you can't take it off these exchanges. You can't take self-custody. Self-custody is at risk in those places, and they have to use peer-to-peer exchanges if they actually want Bitcoin. It's very, very difficult. So it's not out of the realm of possibilities, but I do think there's a reason. I think it's actually way more intentional that they are allowing self-custody in this way. It's so that people have an escape from the inevitable debt-fueled collapse of the fiat system that will happen who knows when, but we know what happens when you get too much debt over time. You default on that, and the default that the government does is they print the currency to oblivion. They have that option. That is effectively a default. So that's about it. If you disagree, I'd love to hear why. If you agree, or if you have additional thoughts, comment them in the comment section below. Again, I'm Forrest Hodel. This is my show here on YouTube, and I also do additional content on the Skool community. As I mentioned, there's a lot of exclusive content on there, including 2 courses, one that I'm still in the process of releasing actively. The other one is Bitcoin Basics and Beyond. The second one is Bitcoin Privacy and Best Practices for Privacy. And also, I do one-on-one coaching if you need to learn, and I think you do, I think we all do, need to learn self-custody best practices and security. You can book a one-on-one with me, and I can walk you through what you need to do and how to do that the most secure way possible. Thanks everybody for watching. We'll see you in the next episode. I've been Forrest Hodel, and we're out.